The audit risk. Okay, what is the risk? What is how the risk only? What is the measurement of the risk? The definition of the risk here is completely different. We are not talking about the risk management. We are different. Make it a point. We will cover this introduction to risk and most importantly materiality. See, materiality is nothing but the value. Okay, material. It is material, yes. If you are saying that 100 reals is also material, is it right? $1,000 is also material. Now, I told you in the beginning, again I am saying this, material will be individual, material will be aggregate. I told you somewhere down in the lecture 2. See, you will have the thing. You are going to a mall, hypermarket, okay? You will have the cashiers will be there. Bank cashiers will be there. Wherever there is a cash transaction. Assume you are having 20 cashiers will be there. Is that 20 cashiers? This is very important. If they say that, fine, every cashier will also have 20 cashiers. Is it right? You will have 8 hours shift. Okay, you have 2 shift, means how many cashiers will be there? 40 cashiers will be there. Now every cashier, they are dealing with cash, they will get $2 short. $2 short. What happens if you take that 2 into 20, $2 each cashier, 2 into 20, 40, 40 into 2 shifts, it comes to how much? 80. Means material is important in terms of individual and material is important in terms of aggregate. If every day 80 will be the shortage and you see the things, there is no point of doing the business. That is the reason in the entire auditing we use the word materiality, and most important we use the word material misstatement. Understand the language of audit. That's very important. Is a material misstatement. We will say, that's what we say. Everywhere, whenever you go for an audit, now we are starting the basic things, the basics of audit. You should know, understand the entity. The entity, you should understand the firm, you should understand the business, and you should understand what is the environment. If you are talking in terms of a telecom industry, your senior will say that, your partner will say that, yes, you go and do audit for a telecom company. You should understand what telecom will work. When you are saying that, yes, it's working, if you want, you are doing the audit for Omantel, take word very clearly. You should know what are the products of Omantel, what are the services of Omantel. Then only you can understand what is the entity. You should know what is the competition, competitors, what are the regulations. Is that what are the regulations? You should understand. Otherwise, simply we are going and saying that I will do an audit for one telecom company. You don't know the things. The first and foremost is you should know, and automatically then only you will understand how the risk is there. Unless until you don't understand, you will not find a realistic approach for doing the audit. Every question in section B, okay, in section A also, every question, the first paragraph, maybe the paragraph will be for only 2 sentences. Maybe the paragraph is only for 3 sentences, not more than 3 sentences. They will always give some introduction about the company, what is happening, an introduction about yourself. You will ask me what is yourself. They will say you are a audit junior. You are a audit supervisor. You are a audit partner. They will mention very clearly. Based on this is where the risk comes here. The moment you are saying that you are a junior, your approach will change. The moment they say you are a supervisor, audit supervisor, your approach will change. They are saying you are a audit partner, your responsibility will increase. Two sentences will be there. One is related to the company and the second is related to your role. There we want to know, understand the entity and its environment, regulations, legal regulations. We are not going to become perfect very clearly. I am not saying that you are talking about labor regulations perfect, law regulations perfect. Nothing is there. But if somebody comes with an issue, as an auditor, you should have awareness. Is it? You should have awareness. We will cover this entity and its environment. Assessing the risk, you should assess what is the risk is there. Basically, it talks about if the risk is high, what we have to do. If the risk is less, what we have to do. And not only we are assessing, more importantly, we are also responding. We should come with a solution. That's very important. At every place, they will ask you a solution. Your identity, that is the reason. What they will say? They will say that identify. First they will say identify. Then they will say explain. Then they will say give some suggestions or recommendations. Is it? Then they'll say suggest. Means you should identify, you should explain. And you should not see, and there should not be a skeleton answers. You are using computer based examination, you have lot of flexibility. You can erase it, you can retype it, you can do, but we should also be clear about our time management. It says, are you clear about this one? Is it okay?
Yes, sir.
Next. What we are learning here, identify the overall objectives of the auditor and how to conduct audit. How you have to conduct audit as per the standards. We cannot have our own flexibility. We have to follow the rules. This is the first point. The second point is why there is a need to plan. How you have to perform, how you have to do the audits. Is that whenever you are doing audits, see, people think that auditors have negativity. No, it is not like that. See, you are asking questions. Fine. And you are asking only explanation. That's all. An auditor will ask the questions, query. We will not use the word questions. We use the word query. Yes, you are asking me the question, I have to answer it. Very simple. I cannot say that, I cannot have any excuse for that. Is it? Now, it means you have a professional skepticism. Skepticism means always you should have a questioning mind. It's not only that, everybody will have questioning mind. And you have to make some judgments. This is very important. See, everywhere your judgment is very important. When your judgment is there, the judgment should be unbiased. You should not give any favor. What is there, you have to do it. Is there what is right, you have to say right. What is wrong, you have to say wrong. Next, you have a different components of audit risk. And most importantly, The audit risk in the we are not doing anything else. We are talking about the what is the risk in the financial statements and how we are going to respond to each risk. Anything you have identified, any shortcomings are there, definitely you should not see what happens. People will say that yes, I will report. No, anything is happening in the financial statements, the first thing is you have to discuss. The last thing is that you have to make a report. In between, you have to get sufficient, isn't it? Sufficient and appropriate evidence. Is it appropriate evidence? That this is when we are going to say this. This is the way the judgment comes. Fine. I'm just, I told you are talking about payment. You will want all the, never expect that you want all the evidences. If you are saying that you are getting 5 evidences, 5 sources of evidence for each transaction, 3 sources each transaction, the moment you say that that evidence is sufficient and appropriate, yes, you have to go forward. On the basis of that, you can make a judgment. You can make positive or you can make negative. That is entirely at your discretion. Is that this is what we are talking about the response. Explain the concept of materiality and most important performance materiality. This will be there for 3 marks. Is it? This will be, I'm not this must, I'm not using the word must. This may be, it will be there for 3. It's not difficult. Is it? Performance materiality. How the performance materiality is there? You will have an audited reports, unaudited reports. You will have the audited reports. You will say that, see, there definitely there will be some gap will be there between unaudited and audited. The ACCA has stated some rules that what the maximum gap, okay, performance. We are talking in terms of performance. What is the maximum difference we can have? If they say it is sales, they say that it should not be more than 1%. If they say fixed assets, they say that it should not be more than 2%. It has been given clearly in the same lecture. If you are going to say that it is going to be on profits, it should not be more than 5%. Because sales value will be more, percentage is less. Profits comparatively, profits will be less compared to sales value, the percentage is more. And this is not our assumption, nothing is there. It has been clearly stated that what is the materiality and what is the performance materiality. And we are, see what we are doing, we are going to calculate materiality levels. Is it? These are the things we will cover. Is that? This is the point number 5 and point number 6. Subsequently, explain how auditors obtain initial understanding of entity and environment. This is very important concept. You should understand the entity and its environment, and subsequently what is the nature, explain the nature, purpose of analytical procedures. What are the procedures we will do in planning, not in audit? Okay, in audit planning, what are the procedures are doing? There are some procedures will be different at different levels. We are talking about the what is the procedures we are doing in the at the planning stage, and compute and interpret key ratios. You are not going to calculate what we have done, I don't know, financial reporting or financial accounting. You are not going to calculate, but only thing we have to make a interpretations. Okay, we have to interpretations. about the ratio analysis. A little bit of ratio analysis will be there, very little. Okay. Now this is point number 7. This is point number 8. This is point number 9. Discuss the effect. See, the thing is, it is a fraud. Okay. Discuss the effect of fraud. Intentionally somebody is doing. Is that intentionally somebody and misstatements of audit strategy and how it will have impact on the audit work. Another interesting thing, how it is going to. Now, what is the responsibilities of internal auditor and external auditor in the prevention and detection of fraud and errors? In the this is point, and what is the auditor's responsibility to consider laws and regulations? It looks 12 points. I am putting intention, but 12 points is not like you are talking about so much. They have divided each and everything in a separate segment. Is that in a separate segment? Are you clear about this? 1 to 12?
Yes, sir.
Okay. Now you see the things. When you have, what is the risk assessment? Okay. This is, see, I am telling you, this is one of the method of documentation. Is that? I told you in the before yesterday class. This is one of the method of documentation. This is called as a flow chart. How things are moving. You will have professional skepticism. Always you have a questioning man. You will take into consideration the audit risk. Is it right? You will see what is understanding the environment, entity and its environment. You also think about assessing in terms of materiality and performance materiality. In fact, what will happen? You will have effect of fraud and misstatement. What is the fraud? What is the misstatement? And in the process, you will analyze analytical procedures in how you will plan. See, we are going for an audit. You will have a clear-cut structure in your mind. You are not going to say that the plan is going to be rigid. You will change the plan once you reach the audit place. According to the situation, you will act. But you will have a very clear approach that I am going to work for a company and do the audit for the firm, and for the firm I will do as simple as that. You will do some basic homework. Fine. Now, this is where it says, what is the chronological of audit? You will plan the audit, is it right? You will understand the entity and you will assess the risk. This much we are doing here. Understand the thing. Now, the thing is which very clear approach. What we are doing in this lecture, we are doing only 3 steps. Plan the audit, understand the entity and assess the risk and selective. We are not talking, I am not talking about all the things. We will cover this in the later part. In the next lectures we will cover this. Okay? In the next lectures we are doing. Now, what is there? Go back to the lecture 1. Let's remind what the overall objective of an external auditor. What the objective of external auditor is to obtain a reasonable assurance. Is that you have to get a reasonable about whether the financial statements are free. With respect to what? With respect to materials misstatements. They are not saying it's completely free. Fine. Material misstatements means they should not have. See, for someone 10 reals is also important, but for somebody 10,000 reals is also important. I can say even it is 100 paisa is also important. You are going to a fuel station, filling station. If you give 5, they fill only by automatically the 5 reals will come. It will stop. Is that automatically 5 reals? It will stop. It will not go beyond. It will not stop less. That is the materiality. Is it? Now, material misstatements happens from two different sources. One, it will happen due to fraud intentionally, or it will happen by error. Is it? It happens. Fine. There is nothing like that. What the auditor is going to express only an opinion. Auditor will never give any suggestions. Is that auditor will only give an opinion. Understand point? They will never give any suggestion. Whether financial statements are prepared in all material aspects, and most importantly, I told you, I see how many times we will come across this as per the financial reporting framework. I have sent you on the WhatsApp group. Is it? I again revise this. That's nothing is there. We don't want all the things. But what they say, it has to be as per the term, as per the rules. What is assets, what is liabilities, what is income, what is expenses, going concern concept, materiality, concept of materiality. Is it? Concept of prudence, conservatism, qualitative factors, true and fair. We all talk about those things. That if you take the thing, the same thing is reflected in the conceptual framework. Now, when we say the thing, see, we are doing accounting as per IAS, as per IFRS. But when you are doing the audit, they do as per international standards of auditing. We have covered few standards. Okay, we have covered few standards in accordance to the auditor's finding. Now, what is the rule ISA 200? Remember this. Write down somewhere in the word file so that you can add in between, because this sometimes we'll go to 570, then we'll come back to 200, then we'll go to 300, then we'll come back to 250. Likewise, there is lot of shuffling will be there, so that wherever it is possible you can mention that. What is the overall, what is ISA 200 says? Overall objective of the auditor in terms of what? Conduct. How to conduct, how to execute the audit in accordance with the ISA. How to conduct, what is ISA 200 say? The overall objective of the auditor. Slowly and steadily, the moment we will revise, these things will come. First time, don't expect till the end of March or mid of April. Don't expect. It will take time to absorb the things, to understand, to come to that language. Automatically we'll have more clarity at a later stage. Okay. Now, when we say the things, what is professional skepticism? Is it? Now, when we say an attitude, see, I told you, it always talks about what? The simple one. You should have a questioning mind. It's very simple. I'm not talking about anything. In order to achieve overall objectives of the auditors need to plan, and you have to perform the audit with professional skepticism and apply your judgment. Why we are covering so many subjects? We are talking about IFM, we are talking about SBR, we are talking about ethics, we are talking about the SBL, we are talking about taxation. Why we are doing? You should have a professional judgment. Is that we should have a professional judgment. How financial statements have been prepared. Is that only financial statements is not only just accounting. It will have sources of finance, it will financial management will be there, taxation will be there, every other component will be there. Is it means what is professional judgment? See, skepticism, it will not change. Understand? It will not change. What we are studying, it will, the attitude includes a questioning mind. Always we have to see, we have to be alert to conditions. Indeed, there will be a possible misstatement either due to the error or we have to take into fraud. They will not using the fraud in first place. Understand the way they use. They will not. You will not be suspicious. Instantly, you will never say that you without going to the basic level. We should not think there is anything wrongdoing. We should first understand, yes, what is the issue. Once we have gathered the information, then only we should say, yes, there is something went wrong. We should not come initially that is the reason. They use the first what they have used, they use the word error. Then they have used the word fraud. Critical assessment. When we are saying it's critical, is it right? You have to think what are the positive factors. Is it right? What are the positive factors? You have to think what are the negative factors. Is it? Now, here what we have to do, you have to understand what is the professional skepticism. Is it? Now, coming back, what is the professional judgment? Relevant, the application of relevant training, knowledge and experience. Is it? We need judgment. Judgment comes with the training, with the knowledge, and more important with the experience. We will say maturity level. We use the word maturity. Maturity comes from what? It is what is the informed decisions about the courses of action. See what actions you are taking. That's very important. What decisions are you taking? That's important. And basis on then what judgments is happening. Is it? Now, when we say which areas the auditor is very much interested, or what is the where will get involved. Now you have very clear thought. There is a materiality and there is a audit risk. I have not told anything about audit risk. I am saying there are three types of audit risk. One is inherent risk, the one is control risk, and the third one is detection risk. I will cover this that when the things will come up. Okay. Now first you have to determine materiality and your audit risk. The second thing, what is the nature, timing and extent. How much you have to do? Is that they will say you have to do audit in 15 days. You have to do audit in 5 days. When they say you have to do audit in 5 days, what you have to do? You have to plan what you are doing, what are the how much procedures we are doing. There is nothing like we have unlimited time. There is a time plan will be there, and according to the time plan we have to plan what are the procedures we have to work out. Evaluating whether sufficient and appropriate is obtained. Whether we got evidence. See the thing, when I'm talking about this language, you can understand what I'm saying. You have to get a sufficient appropriate evidence. This is these words you have to use in your examination. Is that these words you have to materiality we have to use. Is that materiality? This drawing conclusions based on the evidence. See, there is nothing like that. You have to give your conclusion positive. If you agree, give positive conclusion. If you don't agree, we have the right to give negative conclusion also. The most important thing, this is one of the part of audit engagement letter. This is one of the part of audit engagement which we have covered in lecture 1. Audit engagement letter it is the responsibility of the management that they have to apply the financial reporting framework. They have to see, because why it is management? Management is responsible for preparation and presentation of financial statements. When management is responsible for preparation and financial statements, their responsibility is that you have to work with financial reporting framework. The inverted diamond, I can say it like that, okay? The inverted diamond, is that inverted diamond? Fine. This is where we are talking about the professional skepticism. Always you have to think. See, when you are going there, you see everything is good, nobody will call us. When there is some issue, people will call us. Okay? Now, it says that, what it says, in order to obtain assurance of financial statements, that financial statements are prepared as per the framework, they are free from material misstatements. See what we are saying? We are saying it is true and fair. When we say that it is true, it is based on facts. When we say it is fair, it is unbiased. The only thing that matters is that the financial statements are free from where? Free from means there should not be errors will be there, but errors should be within the limit. So what auditor, see when you are talking what auditor will do, auditor will see what is the risk involved. Is an auditor will always see this in order areas where are more. What does it mean? What does it mean? Where there is higher doubts are very high. Is that where there is a chance of that there will be a fraud. Most acceptable to material are investigated. Where you find that things are not going well, you will put the hand there. Very simple. I am saying that it means you will touch those points. You see, as an auditor, you are very sharp. Automatically, they will train you in such a way that you will become very sharp. You will not see. You will see what's happening. You can assess the environment, whether the environment is as per the requirements or not. We need to understand risk in the context of what? In the context of purely financial statements. And when you are doing that there are two types of risk. In the beginning we will say, but we will not use this anywhere. We will not use this anywhere. Extreme cases you will get in MCQ. Maximum. They want to understand they will give the options and ask you to make sure that what is the business risk and what is the audit risk. I told you audit risk 1, 2, 3. Is it? I told you audit risk 1, 2, 3. See the thing. What is the audit risk? Inheritance risk, control risk and detection risk. Business risk is inherent to an entity, at all levels. Business risk is part of the things we have done. In some cases, we have done systematic risk, market risk. Is that it is inherent to entity at all levels. Whereas Audit risk is that the auditor express. See, risk is automatically we will think from a negative perspective. Inappropriate audit opinion. That inappropriate means when there is a possibility that something goes wrong. Is that where the things are going wrong? The things are going wrong whenever there is a materially misstated in terms of value. What the rule says that I will complete this and I'll stop here. What it rule says that they say that it requires ISA requires auditor to follow risk based approach. Where there is a risk, where there is high risk, you have to make a judgment. Where there is a less risk, you have to make a judgment. If the risk is high, you should go in detail. Is it right? You should go in detail. If the risk is high, okay? If the risk is high, you see what you have to do. You have to. I am saying little bit early. I am saying you have to increase the sample size. You have to do the detailed procedures. Is that risk-based approach? Based on the risk, you should make an assessment, and based on if there is no risk, if you see what you will do, you will select 5 samples. Okay, now I will tell you very clearly. You will select 5 samples, so 5 transactions. If all the transactions are fine, you will not select another 5. But if you say that if you are selecting 5 samples, and on these 5 samples you will find 3 samples have some errors, there is some you are suspecting something, then automatically what will happen, you will add another 5 samples. This is called as a risk based approach. If the risk you have the judgment that the risk is less, definitely you will not going to say that I will not verify, I will not take the evidence. You will take the evidence of 5 samples 100%. Based on the results, you will decide, you will make a judgment whether I should need additional 5 or I should not need additional 5. Is it? The audit risk has 3 components: control risk, detection risk, inherent risk.